Hello everyone, welcome to A to Z HELPMY Self Abhinandan. This is an AI generated voice, so let's start happy learning. The fear of losing money is high, and many people may rush to sell their investments to avoid further losses. However, a falling market can also present an opportunity to make money if you know what you're doing. In this article, we will discuss some strategies you can use to make money in a falling market. Short selling is a strategy used by traders to profit from a falling market. In short selling, you borrow shares from a broker and sell them in the market. You then wait for the stock price to drop, buy the shares back at a lower price, and return them to the broker. The difference between the selling price and the buying price is your profit. Short selling can be risky, as you can potentially lose more than your initial investment if the stock price rises instead of falling. Investing in inverse ETFs are exchange-traded funds that are designed to perform the opposite of the market. For example, if the S&P 500 falls by 1%, an inverse ETF that tracks the S&P 500 would rise by 1%. Investing in an inverse ETF can be a way to profit from a falling market without short-selling individual stocks. Buying quality stocks at a discount. The falling market can be an opportunity to buy high-quality stocks at a discount. Look for companies with strong fundamentals, such as low debt, high earnings, and a history of paying dividends. These companies may be temporarily undervalued due to the market downturn, but their long-term prospects remain strong. Buying these stocks at a discount can lead to significant gains when the market eventually rebounds. Investing in defensive sectors, such as consumer staples, healthcare, and utilities, tend to perform better during a market downturn. These sectors provide essential goods and services that people will continue to use regardless of the state of the economy. Investing in these sectors can provide a measure of safety in a falling market. Selling options can be a way to generate income in a falling market. In options trading, an option is a contract that gives the holder the right to buy or sell an underlying asset at a specific price before a certain date. Selling options means you collect a premium in exchange for taking on the obligation to buy or sell the underlying asset if the option is exercised. In a falling market, the premiums for options may increase, allowing you to collect more income for selling options. In conclusion, a falling market can be a challenging time for investors, but it can also present an opportunity to make money if you know what you're doing. Strategies such as short selling, investing in inverse ETFs, buying quality stocks at a discount, investing in defensive sectors, and selling options can all be used to profit from a falling market. However, it is important to remember that these strategies come with risks, and you should consult a financial advisor before making any investment decisions. So make sure you subscribe this channel and like this video.